Okay, everybody. That was fantastic. I feel dumber, smarter. I feel insufficient to the problems. It's amazing. All right, we've got another great guest coming up. We've got Katie Haun, once a prosecutor, Coinbase board member, GP at Andressen Horowitz, huge, amazing resume. Now, at her own fund, Haun Ventures, she raised a $1.5 billion fund last year for this. The scene has changed quite a bit. FTX imploded. There's all kinds of turmoil in crypto, and we're going to hear from her what to expect next. And she's going to be joined by Connie Loizos. So welcome them out.
Hi, everyone. Katie, I'm so glad that you're here. I know that you could be in New York at a big crypto event, and we really appreciate you joining us today.
Thank you for having me, Connie. Thanks for being here.
So it has been about 2 years, just shy of 2 years, since the last time that the two of us sat down together, and much has changed. So at the time you were a general partner with Andressen Horowitz, Bitcoin was trading at $65,000, and Sam BankmanFreed was riding high at FTX. Today, you are running your own fund. Bitcoin is not at $65,000 a piece, and so much has happened. I mean, FTX is gone. We've had Celsius, Three Arrows Capital, et cetera, et cetera. How did you ride out the turmoil?
Well, we're still riding out the turmoil, actually, Connie, and I think some of the things that you mentioned that happened in the space set the space back considerably. So let's back up and talk about what happened. I think the gentleman who introduced us said that it was 1 year ago we raised our fund, and it was actually not 1 year ago. I thought, wow, that was a fast year then. But actually, it's been almost 2 years, not quite. We'll be 2 years old, actually come next year, Q1. So riding out the turmoil, I think one of the things is zooming out what happened. You mentioned FTX, you mentioned a number of other debacles that have happened in this space. And I think there was also a macro correction going on. Obviously, crypto prices were down and starting to go down, actually, because I believe the last peak was November 2021. As you mentioned, FTX had raised a large round, and it was not only FTX that raised a large valuation. It was a lot of other companies and projects in the space. So riding out the turmoil, we are still riding out the turmoil. As I said, a couple of those things set the industry back, in my estimation, years.
I guess, what are the red flags that you saw that others seemingly missed?
Well, I don't really want to look backward. I mean, looking forward, what I can tell you about is what we look for in our founders, because that's how we're approaching the space. So one of the things we look for first right off the bat is, first of all, we look for no conflicts. I mean, it's hard sometimes in crypto, but in traditional venture, I think this was very much something that folks looked for. And being on the board of Coinbase, I'm now on my third board term with Coinbase, so I was always kind of team Coinbase, and so really was never going to invest in FTX for that reason alone. Sure. So we didn't even get past go. Okay. But another point is, one of the things we look for in our founders is who do we want to spend really the next 10 years in business with? And obviously we bias, being in crypto, we bias toward highly technical founders. But we also bias toward founders who do have a certain degree in humility in certain things. They might be obsessive about a few different areas. Maybe it's product, maybe it's recruiting, engineering, but they have the humility to know that they don't know everything. I've yet to meet a subject matter domain expert in absolutely everything, but I have met plenty of founders who think they are domain experts in everything. So we look for founders who have that humility, who we want to enter into really a 10-year partnership with. And those are some of the things that we look for. We also look for, frankly, we know that regulations and laws are important. The gentleman who introduced us mentioned I was a federal prosecutor for a decade. And so that's something that's still very important to me and also to our team, because it's not just me. We have 12 people, and a number of us used to work in the government.
Sure, and congratulations on building your team. You know, I did want to ask, so in preparation for this interview, I was watching a clip of you on stage last year in the Bahamas with Sam BankmanFreed being interviewed by Michael Lewis, the writer. And, you know, speaking of Coinbase, yep. Sam spent like uninterrupted 7 minutes talking about everything that was wrong with all these other crypto exchanges. They were broken, people were no longer innovating, and you just sort of sat there quietly smiling, and I'm just wondering now, what you were thinking as that was happening.
Well, actually, I remember, and I don't know if it came out on the video because it was a large audience. I had just stood up my firm, and one of the reasons I was there was it was a very important industry conference at the time. I was building a team, I was recruiting people. There were a lot of different founders who were there. And I remember actually getting booed because of what you said. I was very much Team Coinbase, and the audience, by and large, was, a lot of FTX supporters.
Right.
The only other time, I think I've met him 2 or 3 times. The only other time I shared a stage with him was behind closed doors, so I won't say too much about it. But I can tell you also, I was talking about governance, and there were some awkward moments where he was saying other things.
Things were not registering. Well, I did kind of wonder, wearing your former federal prosecutor's hat, his trial kicks off in 2 weeks. What are you going to be looking for? What should we maybe be looking for?
Well, what do you mean in terms of what should we be looking for? I think
I'm just
a
wondering
lot
what
of the case. I think a lot of the case is out there in the indictment already. But of course, we've all been surprised by more and more bombshells. I think stepping back into my shoes as a prosecutor, one of the things that you do is you will continue to gather evidence, write up and witnesses, right up until the moment. I guess one thing that we might be looking for, and of course the government will have already had to produce this, is their witness list. So who is going to take the stand against him?
Yeah.
That's one thing I'd look for. I did tell everyone at the time, and I maintain this position, that I do think he will get a very lengthy jail sentence.
It's looking that way. We'll all be watching with bated breath. Early last year, so between, was it like March of 2022-ish?
When we raised our fund?
Yes,
April.
when you announced it.
Actually, April 2022.
Okay.
March, April.
It was a big deal, though. You raised a $1.5 billion fund. Well, actually, you raised 2 funds. One was a $500 million early stage fund. Then you raised this $1 billion acceleration fund. So much was made of that number. It's one of the biggest debut funds ever. It's the biggest fund that a woman has ever raised. It's kind of funny, I guess, because you and I had sat down publicly shortly before that. People were reaching out to me to ask if I could introduce them to you, which has never happened before. So I guess I'm just wondering, how much interest did you really have? Because I'm guessing it was above even what you raised.
Well, I think there were 2 real misperceptions with our fund that still persist. One misperception about our fund, as you mentioned, is that it's one big fund, and it's not. It's 2 funds, and I'll address that in a second. But I think another misperception is, oh, wow, you raised at the height of the market, great timing, peak. Actually, that was not the case. We definitely raised at a much easier time, to be sure, than we would now, and we're not going to be out fundraising for a very long time, can tell you that. But at the time that we were raising our fund and talking with institutional LPs in the first quarter of 2022, a lot was happening already. It was not a walk in the park. Number one, crypto market cap had dropped 40%. People forget that. So there was already tremendous sharp decline in crypto prices, 40%, again, from its peak in, I think it was November 2021. Yeah. So that was the first thing. The global macro picture was really shifting under our feet in real time. That was already going on. Inflation, rate hikes. And then, of course, also before we closed our fund, Russia invaded Ukraine.
Right.
And I could go on with other things that were starting to happen in the crypto space. Of course, things continued to happen in the crypto space and in the global macro picture. But we were not closing our fund at a time when LPs weren't worried about volatility. They were. And I think one of the things I'm very grateful for is that we have LPs who know that this is going to be volatile. We addressed that, and we talked extensively to them about the volatility in crypto. On my team, several of us have been in the space for a decade or more already. And so we knew from our experience with prior cycles that there would be volatility. And we have LPs that have that long-term view. The other big misperception about our fund is we're one huge, enormous $1.5 billion fund. And we're not. We have 2 funds. We have an early stage fund, $500 million. We do seed, A, and B. And then we have an acceleration fund, which backs all kinds of later stage projects in crypto. And there are a handful, and tokens, and a handful of later stage, kind of pre-IPO, you can call it, companies in this space. And so we have those 2 funds. No, to answer your question, Connie, we did not take every dollar available to us. That's definitely not the case. I can tell you that today. The size was purposeful of those 2 funds. I call it kind of the Goldilocks size. One, we wanted to be big enough to compete with some of the other top crypto funds. And we also wanted to work with the best founders who often are looking for funds that can support them through multiple cycles of their journey, seed, A, B, et cetera. So those two fund strategies turn out to be quite a bit different. And it's not one huge fund, and the pacing is very different, and the strategy is also very different. And the companies that we end up backing are very different.
Right, sure. And I want to get into your strategies. I did want to ask one question. It's out there. You've got some sovereign wealth funds behind you. This is true of a lot of people in the industry. One of them is a public investment fund, which is also a backed founders fund, Tiger Global, many other funds. There is sort of this angst with U.S. companies partnering more closely with Saudi Arabia, from PE to VC to the PGA. I'm just wondering if that was at all a difficult decision, or if you can just sort of talk about that for a second.
I think just a correction, it's not actually the PIF fund.
But it's their backing.
Novel,
yes.
And then also another entity there, a university entity.
Okay.
And I think we're very proud of our LPs. As you said, it's a diverse set. It's a very global set of sovereign wealth funds, of foundations, of hospital systems, of an Ivy League endowments. I mean, so it's a very diverse and global set, and we feel very lucky to have all of them. I think one of the things we do is we definitely follow what the U.S. government is also doing in making our decisions about that, about who to take.
Okay, that's interesting. Right. Well, it's a great point. I see what you're saying. How much do you have of the fund left to invest 18 months later?
Yeah, so I don't want to slap a number on it, and I'm not sure that these funds are public. I have to be so careful now that what I say isn't investment advice, and we are a registered investment advisor with the SEC, so I want to be very careful about exact percentages, but I can give you ballpark.
Okay.
I think of our, and this is very ballpark, but of our later stage fund, we have not yet deployed about half of it.
Okay.
Maybe even a little more than half. And of our earlier stage fund, it's considerably less than that. But we are making new investments. One of the things that happened is we were waiting for the markets to correct. We're still very busy. I think there's a perception out there that, oh, crypto, it's crickets chirping. We find ourselves very busy, but one of the things we did do is we saw this market correction, and we very purposefully waited to make some deployments, and I can get into that with our strategy. So I know this is going to sound a little odd, but we feel actually it's a really good time to be investing in the space during this down market.
Sure, I'm sure prices are a lot better than they've ever been.
Well, that's
gotta
certainly
have
true.
A lot of leverage. I wanted to ask if you were to go out today, just sort of to gauge the market, if you think you could raise as much as you did when you did, if you would want to raise as much as you did. I saw that Blockchain Capital just announced $500 million in funds. I'm just wondering what you think the market can support right now.
I don't want to speculate on it because we are nowhere, as I said, our approximate percentages of deployed, so we're nowhere near thinking about fundraising right now. I think what I could tell you, and we've seen in crypto, with our experience in crypto, and frankly, all of tech is going through a similar cycle right now. We've just seen it before in crypto in a shorter time frame.
Right.
Things change so dramatically from one year to the next. I mean, you've seen crypto market caps swing wildly, and I don't want to say what conditions would be in a year, in 2 years. What I can tell you is that we were very deliberate and thoughtful about who we partnered with. We also took LPs who we thought had strategic value, including for the projects that we're backing. We are backing U.S. projects. We're also backing projects globally. And so that was very much in mind. We have brands that are strategic. You mentioned sovereign wealth funds. We talked about foundations, endowments, but we also have huge corporate global brands that everyone in this room would have heard of who we think are very strategic.
Can you share any?
I don't think I can. Some of them have shared.
Okay.
So it's find outable,
okay,
as we would have said when I was a prosecutor, but we actually don't disclose our LPs per the terms of our LPA agreement, but you can go look. Some of them have disclosed that they participated in our fund. And why was I saying that? What were we talking about? We were talking about. What did you asked me a question about fundraising?
Oh, I think I just asked if you would raise what you raised now.
Oh, so what I was going to say is one thing we were purposefully, because we did at that time, as I said, did not take every dollar, so we did have our choice of LPs at the time. And I don't know what things would hold in the future, but I can tell you that we made very clear we were interested in large partners who would make multi-fund commitments.
Great.
If I have my way, we will never have to take another LP again, because we love our existing set of LPs. And the other thing I would say is we don't intend to, I know this sounds in 23 sitting here like an obvious thing, but we don't intend to ever increase our fund size no matter what the market is. And by the way, I'm sitting here publicly stating this on the record in a tape setting, even if the market, if it's a massive crypto bull run, we don't ever intend to increase our size. We think we picked our size and our strategy for a reason.
That's great. So let's talk a little bit about your strategy. You obviously know which companies to avoid. What is interesting to you right now?
Yeah, so again, this gets back to which fund we're talking about. Let me talk about our acceleration fund. And I think the kind of use cases, or at least some of the companies that we're interested in, will be more familiar to this audience because they are a little bit more mainstream. They tend toward more financial use cases, picks and shovels, custodians, and the like. And for that acceleration fund, that you can think of that fund as we call it the it's working fund. Things are already working. These are not early stage. They're not very experimental. In many cases, they're businesses with clear revenue models already, with metrics. And by the way, we've just done 2 deals we haven't announced yet. They're companies that are very known in crypto. They're iconic brands. They've grown even during this trough. And they have revenue, and they have customers, and they have metrics that will look very familiar to some of the folks in this room who invest, or some of founders who are creating metrics. They're very traditional metrics that one can measure and growth that one can measure. And one of the things I'm very excited about is these are teams that we've known for years. Again, I've been in the space now for a decade. Some of my team has too. Many of them were early Coinbase employees.
Okay.
And so these are teams that were known to us. And I think what happened is, smartly, some of these teams raised a lot of money during prior cycles. And so they have kind of war chests now, so they don't need to raise capital again. So they're not raising more primary capital. But because of the relationship and the work that they knew we would put in, and my team would put in on behalf of these companies, they wanted to partner with us. Now, problem, we raised at this time when, although I said it was a 40% correction, it still hadn't corrected as far as it has now. The valuations were pretty high. And one of the things I have to do for my LPs and for our LPs is deliver venture-style returns. And I did not have the confidence to think, okay, at these valuations, I can really deliver what are true venture-style returns, which is my fiduciary obligation. What to do? We couldn't get involved. However, with the markets correcting so much, and again, it's not just crypto, it's all of the technology markets and public markets, these companies also were no exception. As I said, we were in touch with the founding teams, even when we weren't investors, and we developed what we call our harpoon strategy. We knew the price at which we would be able to get involved and feel confident that we could deliver venture-style returns, and that's exactly what we've done this year, which is why that number is hovering somewhere around the 50% deployment rate. We have gone out and we have acquired pretty meaningful stakes in some later-stage companies that I feel like are iconic crypto businesses.
That's great. Let's make news. Tell us what they are.
I think I told you, I think what I committed to do is that I would tell you first.
Oh, that's right.
When
That's
we
right.
announced
So you better
it.
call me in 2 weeks. I'm hoping to do that.
But we will, it's not up to me, it's up to the founders of those businesses when we can announce those deals, but I'm very excited about them, and they're teams that I've known for years and feel very excited about. So that's on the later stage fund. On the early stage fund, people often think, oh, that's crypto? That's a crypto business? It is a crypto business because how we think of crypto really is cryptography paired with economic incentives. So that's how we think of crypto when we think of a crypto business. And that leads to things like, I know, Connie, you've asked me before about zero-knowledge proofs.
Yes.
Zero-knowledge proofs are something that I feel like we're seeing a lot of experimentation in, a lot of development in. There are some zero-knowledge proof protocols that are going to launch in the next year that really have nothing to do with the financial case in crypto. There are things like, let me give you one kind of use case. And this is not a demonstrated use case yet, by the way, but this is one thing that you might use a zero-knowledge proof for, age verification online. This is something many enterprises and people need to do. And zero-knowledge proofs are a way to do that in a more secure fashion.
Sure.
It's really zero-knowledge proofs are kind of a breakthrough in cryptography. So that's one example. One of our portfolio companies, Alio, is an example of that. But we're also seeing more of the infrastructure stuff out of the early stage fund, and I'm very lucky that our deal team, we have an early engineer from Coinbase and Zora, we have someone from Index Ventures, and then of course we've got another deal partner who came from Coinbase Ventures. So these are people who have been on the lookout for these kinds of technologies for a long time, and now they're starting to come online. It's developer tooling plays. like things like Third Web, which is a portfolio company that we've announced its based right here in San Francisco, and they're building developer tools. It is, in the early stage fund, it's a lot more infrastructure facing. People say, well, what are the use cases? Which I think is a very fair question that few people in crypto answer, and I'm happy to answer that. On the early stage of things, though, the use cases, really the end users still of early stage crypto projects are developers.
Okay.
So they're not as much consumer facing. Now that could change, and we've seen that change quickly. What we saw in the last cycle of crypto was that enthusiasm got a little bit ahead of technical progress. And so we're seeing some of the corrections there now. And a lot of infrastructure is getting built. You hear things like sovereign roll-ups, like one of our portfolio companies in our early stage that we led the seed round for was called Zora Labs. They're building sovereign roll-ups. So this is very infrastructure, very developer-facing, whereas, again, the later stage fund, a little more consumer-facing, more financial institution architecture. Okay. So hopefully that addresses a little bit about the strategy.
Well, yeah, when you talk about later stage companies that you may be getting involved in, I mean, I just always think of like the biggest brands that, we sort of emerged in the last couple of years, and most of them are consumer-facing. Some of them are NFT companies. I did want to ask you, so one of your companies I saw announced was Zora Labs, which is an NFT marketplace.
Yep.
Does that compete with OpenSea?
Not really.
Okay.
Not really. They're very different companies.
Okay.
As you know, we're very involved with OpenSea. I was very involved with OpenSea, and I'm still very excited, even though the volumes are so far down. I'm very excited about the concept of digitally scarce goods. And I think you have to really think about why that is. I think the acronym NFTs, or non-fungible tokens, gets really associated, especially in the media and especially by consumers, fairly so, with a really niche thing that's very inaccessible to many to use. It's also inaccessible to many and to most to buy. People think of these high-priced profile pictures, and of course, one of the early iterations of NFTs were that, right? They were
Bored apes.
you needed specialized software to use or a special wallet, whether it's MetaMask, whether it's Coinbase. It wasn't a really easy consumer experience. But I think if you step back, one of the things that's still interesting to me about digitally scarce goods, and I've always called them that, I called them that even prior cycles, not NFTs, but digitally scarce goods, is that they're a new business model for the internet. And it's so early days. I think that it started with art and collectibles, and we've talked about that.
Yeah.
But I think that what people don't realize is that brands are still doing these around things like gaming, around things like fashion. So you've had Nike, you've had LVMH, you've had Starbucks, still experimenting right now with digitally scarce goods. They're just not calling it NFTs. They're not calling it digitally scarce goods. Why do I even find that exciting at all? Or why do I think that it would grow in the future? I think that more and more of our lives are digital. I think that eyeballs on screens are up and to the right. And I think that in that world, it will be important to enforce digital scarcity and as consumers to actually own goods that today, when we own a digital good, we don't own it. We don't possess the properties.
I'm not convinced that people need to, I guess, own things. I mean, just based on, people are lazy. The last time we talked, we were talking about maybe Royal, we were talking about music NFTs, and you were explaining, and I understand that it would be great if artists got better economics for their hard work, but it's still complicated. And why would you not just go to Spotify and listen to the song that you want? And do you care about owning it? Not really.
Well,
as long as you can hear it. Whenever.
The reality is that people say they value privacy, but they really value convenience, right?
Yes.
We've seen that time and time again. And I completely agree with you, by the way, Connie, right now.
Yeah.
But the infrastructure is changing. And I think that where we're making bets, don't forget, we're not a crypto hedge fund. We're not trading in and out of tokens, in and out of companies. What we're doing is we're making bets for 7 to 10 years from now. And one of the things I've tried to be careful not to do is be dismissive of technologies that a lot of people, frankly, don't see the use of early on, think, well, I wouldn't use that. I mean, look at Twitch. I remember hearing about Twitch, and I thought, why would anyone want to watch someone else play a game?
Right.
But I've thought that about a lot of things, and I've been wrong.
Right.
And so I think we're not an NFT fund. We're doing a lot more than just that, but certainly we are making select investments still. That is an important, I think, sector in the space. And you mentioned Zora. One of the things that Zora is doing is trying to make it cheaper and easier for people for free to mint things for creators. So I think Zora is really focused more on the creator. And so we're very excited about it.
That's great. So I'm sure you hear this all the time, and I don't doubt, probably 2 years from now when we sit down again, the market will be hopping. But like when you look at AI, I just feel like AI is something that people can, grok. Like the efficiencies are in sight. Everybody is already benefiting from it. With crypto and these, blockchain, it's complicated, and I think it just seems like we keep talking about it as a new industry, but it is, 10 years in. So, I mean, what do you think is going to change that? Where will we see a tipping point?
Yeah.
If you had to
Well,
guess?
I mean, obviously, I don't know the answer to where we will see the tipping point. Where will the tipping point come? But I can tell you that one thing is people are not paying attention. They say, oh, what's going on in crypto? They think, questions that you asked me with in the beginning around companies that have failed, but they are missing some of the news. I mean, again, having been through 3 cycles, we've heard that the space is dead, actually, in all 3 cycles before,
Right.
every single one. And as my team says, who are Game of Thrones fans, what's dead may never die. But in all seriousness, the thing that happened, even just this year alone, some of that, it's been a year of lowlights, make no mistake, but it's also been a year of some highlights. I mean, just this week alone, you saw PayPal announcing a stablecoin on Venmo. That's a really big deal. Visa also announced earlier this year that they're going to be experimenting with stablecoins. Also a big deal. I don't think you would have the world's largest asset managers, from BlackRock to Fidelity and beyond, filing crypto ETFs if it were a flash in the pan. I think those of us who are following the space day to day, which is what we're doing, we see also technical progress. We see developer activity up. Again, those end users or customer use cases. Really, we're still at the point in crypto of infrastructure phase, developer facing.
Sure.
And so breakthroughs in cryptography. But also, let's not forget the merge happened just under a year ago on Ethereum. And the merge was really significant, but it wasn't really focused on by many people in mainstream media. It got some attention.
Yeah.
But had that happened when prices were high, it would have gotten a whole lot more attention. I mean, the merge was the largest software upgrade ever, with almost no downtime. Actually, I think it was 0 downtime, all while supporting billions and billions of dollars in volume. And that's pretty significant if you think about it. And that was years in the making. And had that happened when crypto prices were high, I guarantee every single person out there would have been talking about the merge. But because crypto has a bug and a feature of this real-time price ticker feed attached to everything, it really, some of the things go unnoticed. And, I've seen irrationality on the way up in every single cycle. And I have also seen irrationality also on the way down.
Sure. That's how it always works, right? Well, we're running out of time, but of course, we haven't even talked about the biggest, I guess, obstacle to date, which is one of the biggest obstacles, regulation. As an investor, you mentioned that I think you mentioned at some point earlier that you are investing in U.S. companies, but are you less inclined going forward? I mean, are you hesitant to invest in American companies because regulation here remains so uncertain?
We're not hesitant to invest in U.S. companies. We invest in U.S. companies, and we will continue to do so. What I would say is the same thing I've said for actually now several years, which is that the law and the regulations are decided in this country by the courts and by Congress. They're not decided by independent agencies. So just because an agency says something doesn't really make it the law.
Right.
And I think a lot of folks don't realize that. And so we've seen agencies and we've seen a certain branch of government get really involved. And by the way, different administrations too. This is bipartisan. Get very, very involved. And I think what we're starting to see now is our system of checks and balances starting to work. So I've been saying for years it's going to be going to court, and courts are going to tell us what the rules are, and that's happening. In fact, in the last month, we've had a trio of losses in one agency, the SEC's position, by 3 different federal judges. In fact, in one case, Connie, it was a 3-judge panel of the D.C. Circuit, a very ideologically diverse panel, unanimous. The D.C. Circuit is 1 step removed from the U.S. Supreme Court. And they said that the agency had acted arbitrarily and capriciously and sent them back the proposal to do their job over again. So I think that the court is starting to push back. By the way, Congress is starting to say, wait a second, this is a really major area of the economy and could be national security. We're going to start getting involved too. You had bipartisan, 2 different committees, both in the House, and then you also had in the Senate legislation being introduced at the committee level. That's never happened before. And that's never happened before, nor has, I told you, the world's largest asset managers entered before. Stable coins now, in 2022, were $6.87 trillion of volume. Wow. The IRS just issued guidance. Honestly, Connie, I know this is a very contrarian take. That's what we do as investors. But I will tell you that I have actually never felt that in prior cycles, crypto was more inevitable than in this cycle. And this is the 4th cycle I've been in crypto. And the reason is you've got the IRS passing guidance. Like I said, you've got legislation being proposed. It's not passed, but it's proposed. Bipartisan. That's just in the US. We have not talked about internationally and globally, and of course, crypto being open source, 24/7, distributed from the get-go globally. I think it's really important to also look at what's happening globally, and the picture's brighter on what's happening globally. You have a majority of G20 countries now moving forward with crypto frameworks.
Yeah.
You have countries like the UK, like Japan, then Abu Dhabi, like the BRIC countries, as they call them, BRIC countries, now starting to pass frameworks also. I think these aren't like small nations that folks haven't really done a lot of business in. These are very sophisticated economies, and I think that right now they're moving forward because they realize the inevitability of cryptography paired with economic incentives.
Do you think Gary Gensler, the SEC chief, knows what he's doing?
Well, I hope he does, but I will say that courts have started disagreeing with his position. I think he is, and I don't want to make it personal to him. I think the SEC, under his chairship, has really taken a very expansive view of their jurisdiction in a way that I think, by the way, make no mistake, it's not just crypto. It's on AI, it's on climate, it's on other major policy questions that concern the US economy. And I think that's a bit concerning because that's not how our system is set up. Our system is set up that's saved for the courts. And I think that's why you've started to see some federal judges, not connected federal judges, right? You've got a federal judge in New York, you've got a 3-judge panel in Washington, D.C. starting to say, wait a second, this is a step too far. But I think invariably, like most agencies, they'll probably get some wins and get some losses. I will say, unfortunately, despite companies like Coinbase and others calling for more regulatory clarity for a number of years in the space, none came, and we had all of the debacles that you talked about. And I think what's going on now is regulators need to prove that they're the tough cop on the beat, and they're going after whatever they can, even if they might not ultimately prevail.
Sure. Last question, and thank you for sticking around. So SBF's trial kicks off in 2 weeks. Just wondering, do you think it's going to sort of bookend this chapter, or do you think it could hurt the industry even further?
I think it will be nice to have some closure on this chapter, but I would say that I'm not making any predictions here at all, but I will say in my experience as a federal prosecutor, trials can get continued. I'm not saying it would happen here or that I'm actually not following it as closely as you might think I would be, because we're really focused on the future. But it's possible it gets continued. I hope it doesn't. I hope it goes forward, and I do think that it would be nice for the industry to have a bit of resolution there, and also see that a large financial fraudster is brought to justice. Yeah. That's the former prosecutor in me talking.
Great. Katie, thank you so much. Thanks,
everybody.
Thank you, Connie. Really appreciate it. Thank you.